What if I told you that the stock market bottomed already? In fact, that it bottomed in October of last year. And in addition to that, what if I said, now the trouble begins? It would seem counterintuitive, but there is a likelihood that the stock market did actually bottom in October of last year. Let's call it 3 months ago. And I'm going to talk about why specifically I'm starting to believe that and the weight of evidence is piling up, and also talk about what to do with it with your retirement portfolio in 23 and even in 24 and 25. Okay, we're going to get to that and so much more. Hey everybody, RC Peck here, and this is my weekly video where I look at everything that's gone on this week and bring you the one thing that matters most in order to retire strong. Because here's the thing about retiring strong. It's not the symbol you own, right? It's not the age or the year you were born or how you answered those 7 risk questions on that Tuesday so many years ago. The main thing that drives a very strong retirement is the strategy your portfolio is in. Now, we believe a retirement portfolio should never take a huge hit, and we believe a portfolio should have kind of the full growth of the stock market. So these weekly videos help kind of give you an insight of what's going on. And something really big is happening or has happened, and I want to talk about that. I'm going to do it in 4 charts. How about that? So let me pop over to the price charts, and we're going to go with this one. So this price chart is a price chart of basically planet Earth's stock market. Now, it's actually the Vanguard Total World Stock ETF. I believe the evidence is building that the stock market bottomed in October of last year. And I'll say the evidence is gaining, or is gaining weight, the weight of evidence, because we won't actually really know for probably maybe a year. And the reason is the point of this video. Now, if you look at the screen and you see that VT, it went down to its pre-COVID high. So its pre-COVID high was over here at about 78, and in October it hit or bottomed down in 78. That's not the main reason why I'm saying it bottomed. Yes, there's a lot of people buying down there. That's called demand. That adds weight to the evidence that it did bottom, but that's not the main thing that changed. Because you could say the bottom in June was close enough to it, but it wasn't the bottom in June. The market rallied and then fell more. So we have to look at this rally, but more importantly, we have to look at the bottom that happened in October of last year. So that's the first thing. That's where my attention is. Okay, now, this is what I think happened. The US dollar stopped going up. Here's the thing I know absolutely about the US dollar, and really about human psychology or behavioral psychology when it comes to investing. People panic into the dollar. When they're not sure, they buy dollars. In order to buy dollars, they have to sell other things and buy dollars. Now, in the US, you don't think of it as buying dollars, but when you go sell the XYZ stock or stock fund, that gets liquidated for US dollars, and you have to buy US dollars. So if you look at the screen, you can see that the price chart of dollars was going up all of 21 and all of 2022 until kind of the October of last year. That's telling us people are not panicking into dollars as much, meaning they're not buying them or they're actually selling them. So when that money comes out of dollars, it goes into, we're going to talk about where it goes into. But this is the weight of evidence that you want to see to start to reallocate your portfolio. And so what we have is the dollar possibly peaking or going kind of through a topping pattern. Last year, you can see if you looked at it, actually started at the end of September and eventually kind of broke down in November. So that is the US dollar. It has peaked, definitely short term. And as long as it stays really below 103, and it is below 103 as of this recording, close of market Friday, let's call it 101, I'll round it to 102. So as long as it stays below 103, let's just call the dollar weak, and that's going to give fuel to the stock markets around the world. The next thing I want to show you, this is the safest investment on the planet. This is a 30-year US Treasury bond, right? So basically the safest place on the planet to put your money. It went through a horrific fall, right? It stopped going up in March of 2020, and it finally had a double bottom in, guess what? October of last year. So we have the US dollar peaking, which is the biggest currency in one of the 5 asset classes on the planet, currencies. Then you have the biggest part of another asset class called bonds, the 30-year bottoming, right? So you have a peaking in the dollar, you have a bottoming in bonds, which is massive. And then that has influenced what is going on in the world of equities. But here's where the tough stuff starts. It's not enough to just know it's bottom, because first of all, we could be wrong, okay? But this is VT again. Now I've just taken dividends out of this. So this is all world. I'm keeping it big picture for this video. But now what we're in, which is going to be a harder thing really for people, because most people, when they retire, they actually don't have that good of a strategy. They probably are in like a 60-40 or a 70-30 or an 80-20. And those were all built really in the late 60s and the early 70s. And a lot of times what just creates anxiety for people in retirement is uncertainty, not really understanding that they will be okay. So now here's the bigger problem. We may be in a really big, kind of wide trading range. So we're going to have big highs and big lows, and that may be the bottom. October may be the bottom of this correction, right? That would have been an S&P falling a total of 25%. The NASDAQ 100 falling, I'm doing round numbers here, falling about 35%. But that's what I see now. And then the question is, really what do we do with this information? Okay, so the first is, it was a double bottom. If there is a double bottom in the stock market, now we're in many ways a more dangerous situation, which is a very wide sideways range. Knowing where the strength is in the market, right? Knowing whether you should be U.S. domestic or international is very important. Knowing how much you should be in bond or stock, or is gold the best place? Those questions actually become more important because the trends are messier. And so, portfolio construction becomes even more important. So thank you so much. I appreciate you being here. I appreciate you leaving a comment. It makes a difference. Leave one. If you think I missed something, say it in the comments. It helps the algorithms. Like, subscribe. I'm going to start doing shorter videos where I just let the community know, like, go check out this one on gold, or go check out this one on bond. But I'll just communicate it to the subscribers on YouTube. It's just easier that way. So if you're not a subscriber, go ahead and do that. Thanks again. I appreciate you being here, and I will see you next week. Okay, bye.